During Tuesday's Asian trading session, spot gold extended its overnight strong momentum, stably trading above $4,580 and hitting a new all-time high of $4,608.84 intraday. It is currently consolidating in the $4,590, $4,600 range with robust bullish sentiment. The US dollar index continues its weak trend, and combined with the continuous inflow of safe haven funds, it provides solid support for gold prices. The crisis over the Federal Reserve's independence continues to escalate. The White House press secretary issued a clarification, stating that Trump did not instruct the Department of Justice to investigate Powell, but emphasized that the president has the right to criticize the Fed chair. This statement further highlights the confrontational stance between the White House and the Federal Reserve. Earlier, Powell clearly stated that the relevant criminal investigation is a pretext for Trump to attempt to interfere in monetary policy, and that he will not yield to political pressure. The escalating conflict between the two sides has triggered deep market doubts about the U.S. dollar's credibility and the stability of U.S. policies, driving continuous inflows of safe haven funds into the gold market. In addition, geopolitical tensions have added new variables. Trump posted on social media announcing that starting immediately, any country conducting commercial transactions with Iran would be subject to a 25% trade tariff, stressing that the decision is final and irreversible. Currently, demonstrations in many parts of Iran have triggered riots, and the U.S. has released another tough signal. Coupled with the lingering impact of the Venezuela situation, global geopolitical risks have erupted in multiple locations, further strengthening gold's safe haven attribute. Regarding monetary policy expectations, according to CME Fed Watch Tool data, the probability that the Federal Reserve will keep interest rates unchanged in January is as high as 95%, and the probability of a cumulative 25 basis point rate cut in March is only 26%. Institutions generally expect the first rate cut to be pushed back to the middle of the year. Although short-term rate cut expectations have cooled, the long-term logic of the monetary policy easing cycle still provides medium-term support for gold prices. Short-term technical analysis of gold. Gold's daily chart shows a continuation of the standard bullish arrangement, with the 5-day, 10-day, and 20-day moving averages forming a stepped upward trend. Prices stably stand above the upper edge of the ascending channel, indicating a clear bullish trend. The relative strength index RSI has slightly pulled back to 78.3, still in the overbought range, suggesting that bullish momentum has slowed, but the bullish structure remains unbroken. In terms of key levels, upside resistance focuses on the $4,620, $4,650 range. Downside support has shifted up to $4,580, $4,590, with strong support near $4,550. Institutions generally believe that the current factors driving gold prices higher, such as policy volatility, geopolitical risks, and the weakening of the U.S. dollar's credibility, are long-term logics that are difficult to reverse in the short term. If you find this analysis valuable, please subscribe, like, and share it with your fellow investors. Thank you for watching.